Hi, everyone. Today is September 22nd. This is a market update for the Greater Vancouver real estate market area for the end of September. So as we all know, your specific situation is specific to you. So do reach out and ask me any questions that's relevant to your buying or selling needs in your exact market. All right, jumping right into it. If you didn't already know, last month, August, finished with 1,904 transactions in the Vancouver Real Estate Board. That represents a 17% reduction versus the same month 1 year ago. Now, I checked this again today, so as of September 22nd, we are trending for about 62 to 64 transactions a day. When I estimate that over the month of September, we are estimating that we'll finish the month somewhere around 1,930 to 1,950 transactions if the trend continues. That would represent similar results to last year. So maybe that's an indication that the market is starting to warm up a little bit, since the previous many months have been negative year over year. However, it's certainly not speeding up yet, even after several rate reductions. So all in all, that is the trend that we are currently in September. You've heard so much talk about housing starts and about where we need to be nationally, let alone locally and provincially in new housing in order to have enough housing. And what I'm keeping an eye on and what you're seeing here, the British Columbia housing starts, it's just showing a long-term trend. And certainly there's no spike yet with new permits launching to in any way accommodate those kind of growth suggestions or objectives that the government has been talking about. And so we continue to be in a modest new home starts category that we have been for a while. And year to date, it is interesting. 2024 has less new housing starts than 2023 for a number of different factors. Of course, we're coming off high interest rates and lots of changes in the government, different levels of government with their housing plans. And now we're going into a provincial election. So a lot of those things certainly affect what builders are doing and what's happening with the permits. What's interesting about this graph that I'm sharing with you is that it shows you the long-term building permits in Canada. What you can see is obviously over the years, we've certainly increased permits. However, nowhere in Canada is in the near term suggesting that we're seeing the launch of new building the way that the federal government was hoping to achieve over the next few years. So it is curious that the number of permits continue to kind of stay in that channel of 11 to 12 million. Unemployment rate continues to go up, sadly, and it is on a upwards trend. It certainly doesn't feel like we've peaked here. There is more long-term jobs opening up where most of the new jobs that have been coming onto the market have been part-time jobs. Also interesting, so this is the unemployment rate. So this is the folks who are looking for work who don't have work. The next slide here is showing you the Canada employment rate over the last several months, and it is trending lower. So these are folks that are actively working. And that is also indicating that, the workforce is shrinking currently and more unemployment is on the horizon, is building. The CPI, so the inflation, the Canadian Price Index, has just come down last week and it's at a low of 2%. So that's on track for where the government was aiming. You can see here, obviously, the big spike up and the big drip down, which is great news because it opens up a whole new set of toolboxes for the government on rate decreases. This image here illustrates, since September of last year, our steady decrease in inflation. And so we bounced around a little bit. It was pretty hard to get us below the 2.5. And then last month, through the help of low gasoline prices, we've now hit that 2% target of inflation. Talking about interest rates, we're now behind us are 3 interest rate reductions that have just happened in over the last several months. What you can see here, though, is we have ramped it up dramatically since May of 2022 with many interest rate increases. And so we're still in a very high interest rate environment for the marketplace right now. And that's probably the biggest factor why the market is quite slow compared to where it should be based on the demand and the long lax market that we've been going through. The 10-year, or this is actually a picture of a 5-year bond, it's showing a downwards trend, which is further assisting the government. I do believe that we're going to get more and more aggressive interest rate reductions in the months ahead. And the next interest rate reduction is scheduled for October 23rd. Now, keeping in mind the last rate reduction, what does that mean for mortgage holders? Well, as you know, variable rate mortgages, the payment will stay the same, but each of the payments will go, more of the payment will go to the principal instead of interest. Adjustable rate mortgages, payment will decrease in sync with your lender's reduction of their prime rate. And fixed rate, of course, there's no changes to your mortgage conditions. I feel inflation is somewhat under control right now, but the employment picture is getting worse. And if it's not for continued high level of government spending, as I was saying, the government really needs the real estate industry to pick up a bit. And so I believe they have a huge incentive in lowering interest rates more aggressively. And they now have the ability to do that with the recent inflation coming down, and also the Bank of America, or the American government, lowered their key interest rate 50 basis points recently. And that's actually here what this slide is showing you. Last week, the Fed slashed the interest rates by 0.5 point, 50 basis points. So that's very aggressive, with more indication of interest rate cuts to be coming both in the States and, of course, as I'm saying, in Canada. The purchasing power here, this graph is showing you the consumer confidence in our marketplace, and it is at a near-term low. Consumer confidence is indicating that most people out there feel their money does not stretch as far, and feeling that we're going into headwinds for economic growth. And yeah, there's contractions ahead with regards to growth on incomes and growth in the economy. So what does this all mean if you're a buyer in the Greater Vancouver area? Well, inventory is up dramatically. Sales are down. So it is a buyer's market. However, you don't quite know all the sellers who are open to adjusting their price perhaps for you. And so if you're a buyer, you need to go out there, and the deals are made right now. Sellers are not reducing their prices on whole across the board. Rather, sellers are pricing to previous sales, and figuring out based on each offer that's coming through where they sit and what they're looking for, and can they get a deal done at the offer that the buyer is making. So in short, if you're a buyer, this is a great market to be a buyer. If you can't find properties right now, you need to ask yourself, what is a variable that needs to change? What is out of line? Because we are in one of the best buyer markets I have experienced in the past 15 years, and yet there's a lack of buyers. Again, inventory is up. Sales are down. So if you're a buyer, you should be able to put a great deal together, and knowing that on the horizon, a year from now, the market will be entirely different. 6 months from now, the Vancouver real estate market will be entirely different. You'll not have the same selection and the same comfort of being able to put together offers with conditions and strength. So if you're a seller, that doesn't mean it's doom and gloom, not at all. It means there are buyers out there, but buyers are very aware of what everything is listed at. They're looking at other listings at your competition. And so if you need to sell, if you want to sell, you need to be more proactive. You need to go to the buyers. You need to adjust your price, and you need to go put a deal together with the buyer, because there is a large number of listings available in the market right now. And again, buyers don't know where you are willing to settle up. And if you're priced well above where you're willing to settle, that is a recipe not to get a deal done. Keeping in mind that I do believe, October 23rd, we'll probably see not a question of is there a rate reduction? The question will be, does the Bank of Canada reduce by 25 basis points or a full 50 basis points, which is my prediction. And I think that will finally be kind of the fuel to get the market going a little bit, and have a busier, October, November finish to the year, and then a very busy start. So if you don't need to sell, there's there's an argument to be made. Maybe you take longer as a seller and sell over the next 6 months. However, you know, we're in a high cost environment. Everything is really, really expensive, and I don't know how far the buyers have stretched. That we may not see the rebound that most folks are expecting, that we've seen in the past coming out of a low cycle. So again, reach out to me if there are any questions that's relevant to you and your business. I am always available. My number is 604-970-0393. Hope you have a great day.